Halo, kembali lagi di channel GRW. And today we are back with Mr. Sebastian Sharp here with us. And today we are going to talk about two specific US stock. The first one is going to be the Boeing, and the second one is going to be Disney Plus, because there's some news about these two companies that might be interesting for us to talk about. Okay. But before we start, how are you today, Mr. Sebastian?
Good, thank you.
Okay, I hope you're feeling good, feeling great today, so we could talk about this US stocks, especially the Boeing and then the Disney Plus.
Yep.
So, first of all, what is your personal opinion about the Boeing? Did you pay attention to it too?
Yeah, I mean, Boeing and Disney, they're both stocks that we cover in Sharp Focus.
Okay.
Sharp Focus, we cover we cover about 120 stocks.
120 stocks.
And most of the big ones. So the total market cap we cover is 41 trillion, I think.
41 trillion, that's a big amount.
It is a big amount, yes. So definitely Boeing and Disney is in the stock we cover.
Okay. So first we're going to talk about the Boeing. So lately Boeing is guided for a consistent positive free cash flow by the end of 2025. If it was achieved, in your personal opinion, how could this reshape the market sentiment and valuation for the stock, for the Boeing stock?
Well, I mean, yes, the first thing is that Boeing is in negative cash flow at the moment.
Right now?
Right now it's in negative cash flow, yeah. It's been in negative cash flow for quite a while.
Okay.
So it's had a lot of struggles.
I see.
The negative cash flow, the results just came out. So,
For the second
we just
quarter?
had the second quarter results. And the cash flow is less negative.
Okay, so
But it's still negative.
But it's doing better then.
It's
bit
doing
better.
a bit better, yeah.
Okay.
But still minus, unfortunately.
Okay, I see. But do you think it's possible if the cash flow is going to be positive by the end of this year?
The way that it's heading, yeah. I mean, we don't like to predict, but it's heading towards positive. We can see that. The only thing is that the market, we look at how the market values the cash flow.
Yes.
And the market expectation is for quite high, I think, for cash flow. So it seems like the market is expecting the cash flow to rebound quite fast. So we'll have to wait and see. At the moment, it's recovering, but it's still not positive.
Still not positive yet, but there's a possibility that it would be positive then. It's heading that way.
It's heading that way.
Okay, I see, Mr. Sebastian. And with Boeing's backlog reaching around 619 billion and over 5,900 aircraft orders, how promising is this pipeline as a long-term revenue and generator for new investors?
Yeah, I guess that Boeing had a lot of difficulty, maybe not surprising, when 2020 all the airlines shut down and there was no travel, there was no tourism, no business travel.
Yeah, because of the COVID pandemic. Right?
Yeah, so it is understandable that they've been through a very difficult time, but actually the difficulty is even starting before that. So it's, I mean, there are only two aircraft companies in the world. There's Boeing and there's Airbus. So if the business is doing well, then there's a good chance that they can do well. But they've had a lot of problems. So they have a lot to prove, I think. Obviously, the market is expecting that there will be a recovery. But I think it's very early. It's still early. Yes, it's improving. Actually, the thing that is driving Boeing improvement is the sales is growing quite fast.
Okay.
So they're having about 20 to 30% sales growth. So if you imagine
this year?
At the moment, so the second quarter compared with last year. So if you imagine the economy in the US is growing about 5%. So Boeing is growing much faster. It is recovering, but it's still not enough yet to generate positive cash flow. Obviously, it's a big industry. It's not fast moving. It takes a long time. It's very expensive to build the aircraft. It's difficult to sell them. So it takes a big effort to get the cash flow positive. And for us, we have to wait, unfortunately, until the cash flow is positive. So the market is expecting, the sales is growing, the industry is doing better, but still no positive cash flow yet.
It's still not enough, unfortunately.
Yeah. And I think Boeing have some other difficulty as well because, they have negative cash flow for quite a while.
Okay.
And when you have negative cash flow, you have to raise money.
Okay.
And they raise debt. And so they have to pay the debt.
As well.
And normally what we see is that normally when the cash flow is negative, eventually the company will have to raise equity, meaning new shares. And if you look last year, Boeing started to raise equity.
Okay.
So I'm guessing that my prediction is they will have to raise more. We don't like to make prediction based on the business, but we can predict based on the cash flow whether the company will have to raise money or not. Looks to me like unless the cash flow is like jump back positive in a big way, they will have to raise equity again. And so that's not great for investor.
Okay.
For us investor, we want the company to pay us money, not ask us for more money.
Not the other way around.
Not the other way around. Okay. So yeah, I think Boeing still have to raise equity.
Okay, so at the moment, Boeing is still not doing as what the market expected then.
Not in real cash flow, no, not yet.
Cash flow, okay. So maybe...
the market may be a little bit ahead of itself.
Oh. So maybe if I want to invest, maybe I could look to in another company at the moment.
Well, for us, we only buy a company that has positive cash flow. So if the cash flow is negative, for us, I mean, for other people,
it might
up
diverge.
To you.
It might diverge, yes.
But we never predict, and if the cash flow is negative, it's negative. So yeah, it's not on our list.
Okay, Mr. Sebastian. So, and Boeing right now, as you mentioned before, they are producing aircraft at the moment as well. And do you think how impactful this might scale up in terms of free cash flow and potential stock price growth for Boeing itself?
Yeah, I mean, they made money before. So presumably if the sales recovers back to the same level as before, I guess costs are higher now a little bit. Well, not a little bit, quite a lot higher.
Quite a lot.
So they'll need to make more sales. I mean, they just need to have a recovery. And it is recovering, but not yet to the level where we can say that it's not right for us for investment yet.
I see, but it is recovering. That's the fact.
It is recovering,
but it's still negative.
But it's still negative.
It's still negative.
And they need to raise probably they need to raise more money, more equity, which means dilution for the shareholders. So at Sharp Focus, we don't really like that. We prefer dividends.
Because who doesn't?
Yeah.
Actually, who doesn't? Okay, so given the Boeing's recovery trajectory, you think now it's still not the perfect time, not the best time for the investor to get in?
No, I mean, stocks go up and down. In our methodology, maybe you miss something, you can miss things, but that's okay for us. We don't mind missing. We'd rather be safer. So it's safer to buy when the cash flow is positive and good. So we just wait. And I think mostly when things go really well, if it's going to do really well in the future, there's no harm to wait a little bit longer. Okay. If it's going to be really good, it's going to be really good. So there'll be plenty of opportunity.
I see. And
we'll wait and see.
Everything is about the momentum as well.
Very much, yeah. So, and especially when cash flow is negative, people can get excited. They can see there's a recovery. They see the sales is growing, but it's probably going to be more volatile. It's more likely to be disappointment, right?
Yeah.
So we'd rather wait until things are more certain. Yeah.
More certain and maybe more stable as well.
Yes.
Okay, Mr. Sebastian. And with the global inflation pressure easing as well, do you think Boeing could see a lower production cost and a better operational margin moving forward?
I would guess, what we see for most businesses is that, prices go up. Maybe in the short term, they have some margin pressure. And then, of course, they raise their prices later. So, yeah, mostly we see that the margin will recover. If it does go down, it recovers. And so, yeah, prices went up in 2020, 21, 22 by a lot. And then it takes time for the companies to adjust. They adjust, and then the margin will come back. Okay. So I don't think that there's really a benefit because it's not like prices are going down. They're just not going up as fast as they were before. So I think it's not necessarily a benefit, but it's all part of the recovery. So sales recover, margin recover, cash flow recover. But we have to wait and see how it really is in reality.
Yeah. Okay, Mr. Sebastian, I see. So in conclusion that Boeing currently is recovering, but the cash flow numbers are still negative. But there is a possibility that it might go in a positive direction in the future.
Yeah. And don't worry, we'll be monitoring it. So every 3 months, there's a new result. So we can see
the quarterly result, right?
We can see how the next result looks.
Okay, so
it's only a couple of months to wait.
Yes. So right now we have to wait for the third quarter result to get out.
I would wait, yeah.
Okay, so for now, it's wiser to wait than to force entry.
Yes.
Okay, Mr. Sebastian, I see. Now, that's it for Boeing, and now we're going to talk more about Disney.
Right.
Okay. So Disney is also one of the stock that Sharp Focus is covering.
Yep,
right?
And we covered for many years.
Since when, if I may ask?
We started covering, because even when you start recovering, you can always look back at the data from before. So it almost doesn't really matter when you start.
Oh, okay.
We started around 2019, I think, with Disney.
Okay.
2018, 2019. But we have data going back to 2011, 2012.
Ooh,
the good thing about modern internet is you can get all the historical data way back as much as you want. So you can see that, and it's important sometimes to look at the whole history, see what the company has done in the past.
Okay, because that's also...
even if you start today, it's easy to go back to 2010 to get the data. It's all on the website.
Because again, like we always said that research is the most important thing when you want to do investment. One of the most important things to do is doing the research.
Yeah, right? And it's very easy to do, and you can do research which goes back a long way. Especially US companies, they give loads of information. You will have no trouble to find all the data you need, 10 years, 20 years, and that will give you a very good picture of what kind of company that Disney or Boeing is.
I see, Mr. Sebastian. Okay, so now that Disney Plus has turned profitable and continues to grow its subscriber base, do you think Disney positioning to outperform in the streaming race? And is it, let's say, a green flag for the investors?
We cover Netflix as well. Okay. So we see a bit of the kind of, the business, the streaming business. Disney is not as bad as Boeing. So the cash flow the cash flow did go negative for Disney 2019, but only for a year. So Boeing has had several years of negative cash flow. Disney only had one.
2019.
Yeah, 2019, and that was because they made quite a big acquisition at that time. So it wasn't because the business collapsed. But then in recent years, Disney struggled as well. The cash flow was not negative, but it was less, it was lower. The sales growth slowed down. So in the last couple of years, Disney has improved. So the cash flow has got much stronger again. In fact, the cash flow now is pretty much back to the previous highest level.
Oh, okay.
So from the minus, it's gone all the way back up again. So Disney's done well. It's not really growing very fast. It's growing around 4%. So the economy is growing 5%, Disney's growing 4%. Boeing right now is growing 30%, 25%. So Boeing is catching up. Disney's still a bit slow, the sales growth, but the cash flow is better.
than Boeing.
It's better than Boeing, and it's better than it was before.
Okay.
So it's improving trend, and it's almost back to the best that it ever was before.
I see. So for Disney, if we look back to the history, their cash flow is going ups and downs as well.
Well, it was quite strong before. Then it had a few years when it was less strong. 1 year when it was negative, and now it's coming back up again, and it's back to the highest level that it was before. Not higher, so it's not really seeing growth, but it has recovered back to where it was.
Okay.
It's not like, because we measure the profitability, so we look at the cash flow relative to the asset of the company. So for example, Apple is almost 40% the profitability.
40%? Oh, that's big.
Nvidia is almost 50% the profitability.
Even bigger.
Netflix is about 11, 12%.
Oh, okay. That's smaller than what I thought would be.
Yes. And Disney is about 7% now.
Okay, even smaller.
So it's not the most profitable. But that's okay. That's okay. That's not too bad. For a company that's quite old and is not growing.
Well, Disney's been around for quite some time.
It has been around for hundreds of years.
Yeah.
Or 100 years. So it's quite profitable. And interestingly, the market expectation for Disney and Boeing is the same. So they're roughly the same market expectation, but Boeing cash flow is negative and Disney is 7%. The market expectation for both of them is 5%.
5%, okay.
So Disney is above the market expectation. Boeing is far below the market expectation.
Okay.
So the gap, 7%, 5% for Disney, it's not a big gap.
Yes.
But it's okay. It's a gap. And so Disney looks it's not growing much, but in terms of cash flow, in terms of market valuation, it looks a lot better than Boeing. And Disney did also, because their cash flow went down, they slowed the dividend down to 0.
Oh, okay.
So they stopped paying dividend.
Okay.
But now they've restarted again.
Oh,
so that's the difference. Both companies, they slowed down the dividend to 0. Then Disney went back up again, and now Boeing is minus. It's raising money instead of paying. So I think Disney looks a lot better, and they both have the same market valuation. So based on that, the market is expecting a lot of Boeing, and it's not expecting much of Disney. So for us, that makes Disney look a lot more attractive.
Okay, I see, Mr. Sebastian. So right now, Disney is a better option then? If we want to compare...
Using our data is very simple, right?
Yes.
Disney cash flow is 7, market 5, meaning there's a gap, which can increase the share price. Boeing minus, market 5.
5%.
So yeah, it's clear which one is the preferred one, using that data.
Yes, and this is based on trusting the numbers.
It's based on trusting the actual numbers, not what they're going to do or what they're planning to do or what people might expect them to do. It's what's actually happening. Yeah.
Okay.
And especially if you like receiving dividends, the Disney dividend is growing again. Boeing is raising money, so it's the opposite. Okay,
because we want them to give us money, not the other way around.
Exactly.
Right?
Yeah, we want to receive, not. I mean, it's nice to give things, but when we're talking about investing, we'd rather receive.
We'd rather receive. That is correct, Mr. Sebastian. Okay, so in general, Disney not only have a streaming platform, right? They also have theme parks and everything else under their name, and currently, the theme park under Disney is contributing the most, like nearly 59% total of operating profits. Do you think Disney's major expansion, like Disneyland, could drive a stronger future earnings for Disney, for the company?
Yeah, I mean, when you look at the cash flow return, 7% is, it's good, it's okay. It's a fairly well-managed business, but it's not that exciting. So I think when you see the company like that, it's kind of okay. But if they really want to be a great company, attracting a lot of, like a Apple or an Nvidia, something that really attracts investors to come and chase the shares up, they've got to improve the profitability. How you do that, I don't know. Can you do it with the existing business, or you have to go into new business? Likewise, we don't know. That's why we never predict. Because we don't know. Is it possible that they could find ways to improve the profitability? Yeah, it's possible. So they've recovered the profitability of what they already have, but it's not spectacular. So they're going to have to do something different, I think. And so it needs to have, every company needs to reinvent if they want to carry on for a long time. I mean, Disney's been around for a long time.
Yes.
They've reinvented them from cartoons to major films to theme parks to streaming. They have to keep reinventing
doing something new.
And so, we need to see some kind of reinvention from Disney. We'll wait and see. So it's okay, not tremendously exciting, but a little bit okay.
But still okay.
It's still okay. But if you want real excitement, you need reinvention. You need something new and exciting.
To help the numbers go up again.
Yeah. And obviously, if streaming is very popular, Netflix is pure streaming.
Yes.
Disney is a little bit streaming. So
yes.
it takes time for them to build up the momentum. But they could do it. If you remember, not that long ago, Microsoft was like a dead stock.
Oh, okay.
It became the largest stock in the world in the 90s, early 2000s.
Okay.
And then it went nowhere for like 15 years.
15 years?
And then once all this new internet cloud, they were able to reinvent themselves and to become, so Apple overtook Microsoft.
Yes.
And became the biggest company. But then Microsoft suddenly reinvented itself and became the biggest again.
It's catching up then.
It caught up again after a long period of not doing anything. Apple had a huge long period where it didn't do anything. So they had, the early Apple computers, a lot of excitement, cool brand, but then nothing for like 10, 15, 20 years. Then they came up with the iPhone, the iPod, and suddenly the company is reinvented and tremendous cash flow, tremendous growth, and became the number one.
Up, yes.
So these companies can reinvent themselves. And so, but we'll have to wait and see. It hasn't reinvented itself yet.
Yes.
It's recovered its cash flow, but it hasn't invented a way to become much more profitable. And so it's not going to make investors very excited yet, but let's see. Maybe they can reinvent themselves in the future.
Because we never know what the companies is about to do in the future and how that reinvention they are doing is going to affect the numbers as well. Because the number's not there yet. Right?
Yeah, because I mean, like computing came, grew, and then it started to reinvent itself, right? And it's always there and it's always useful. So a company like Disney is entertainment, is always there, right?
Yep.
It just needs to be reinvented in a way which generates higher profitability. And so, maybe they can do it, maybe they can't. We'll have to follow the numbers and wait and see.
And again, we have to trust the numbers.
Yeah.
And we cannot say anything.
So right now the numbers are okay, but not that exciting.
Attractive, yes. Okay, Mr. Sebastian. So, as Disney increases their capital expenditures in both the content, the streaming platform, and the theme park, how is the company balancing growth investments with maintaining the positive free cash flow?
Yeah, that's a very difficult one because at the beginning, if you do find something which is very good, but at the beginning you're going to have to spend quite a lot of money on it, so your cash flow will be less good.
Okay.
And so that's why, when we look at cash flow, when we look at cash flow returns, the lesson that I've learned from looking at all these companies from a long period of time is that you always have time to wait. You don't need to rush. When you hear something, like most of the gains in Apple came in the last 6 years. long after they invented the iPhone and the iPad and the iPod. And so you may make more money if you got in earlier, but you can also make lots of money if you wait until later. And so, yeah, when companies are reinventing themselves, that's probably also not a good time to, like Amazon, for example. I don't know if you remember, but in the early 2000s, Amazon went through the roof and then it collapsed and it spent 15 years way down. Then once they really built up the cash flow, then the shares went through the roof.
Went up again.
Yeah. So when you hear something exciting, quite often if that's not if it doesn't mean good cash flow, you can just wait until later.
Because again, we have to follow numbers.
Yeah.
Right?
Yeah.
Okay. So it's not always a good thing to rushing things when you hear something.
Yes. Correct.
Okay. We have to.
And generally with the way the shares move, you have plenty of time. You don't need to worry about missing out. That's why I say people who, they thought when Apple did the iPhone 1, 2, 3, 4, 5, 6, they thought it's already over. But the biggest gain came after iPhone 10. The biggest gain for the shares. The shares went from, 750 billion to 3.5 trillion. Whoa. And so plenty of time to wait.
It's because
that was when the cash flow was the highest.
Highest for Apple.
Yeah.
Okay. And because maybe the US market is very big, so there's always a plenty of time, a lot of momentum if we wait, right?
Yeah, because investors will get tired if they don't see the benefit, like big dividends and stability. The stability in the dividends comes later. And people generally, especially the big investors, that's what they want. So they will wait until later. So the biggest moves always come much later than you think. And so that gives you a lot of time to do the research, look at it, follow the cash flow. And you don't need to worry too much about missing out.
Does Disney business diversification, like from streaming platforms, the entertainment part of it, and then the theme parks as well, and right now Disney also have like consumer product, right? Because they sell merchandises and everything else. Do you think this provide a unique hedge against economic volatility for investors?
We don't really like hedges.
Okay.
I think we discussed it last time. Generally, if there's one thing, there's one good thing, better you put all your energy in that.
That one good thing, yes. Okay.
And don't worry about, if it's good, it's good, right?
Yes.
So you don't need to worry about the hedging or anything like that. That's why when we talk about shares, you don't need many shares. You only really need the best one.
Yep.
And so what we're looking for is the best one, the one that generates the highest cash flow and has still got a lower market value. So there's an opportunity, there's a gap. And if it's good,
then it's good.
Then it's good. Then you don't need to worry about anything else. So I think probably the lesson for the business is the same. The one that has many business will never do as well as the one which focuses on the best business.
I see. So having like a diverse field,
it can work against you, I think.
Definitely, it's not always a good thing.
Definitely work against you. Yeah, no, it's not a good thing at all. Much better to find spend your effort and energy finding the best company, right? And then go with that one and don't worry about any of the other one. That's why you have to be patient, because it might take you time. You've got many things to look at, right? There's thousands of stocks to look at. If you try too much to look at everything and try buying this, buy that, you will miss the best one. So better to spend more time looking for the best one, and same for the businesses, and then just focus on that. Because if it's the best one, it's going to be the best one.
If it's good, then it's good.
Yeah. We were calculating the other day because Berkshire Hathaway is famous for the performance as an investor. Everyone is famous around the world. But they bought Apple. They waited and they bought it, but perfect timing because the momentum was there and the share price went through it, and they made a lot of money. But they would have been much better off only focusing on Apple and forget about their other investment because it was the best one.
At that moment.
Yeah. So why not spend time looking for the best one? Don't do anything until you find the best one. When you find the best one, put everything in the best one.
Just focus on that.
Yeah.
Okay.
For me, I think that's a much better way to do it. And once you find something that's really good, just stick with that.
Okay.
And especially when you find the momentum is there because the risk becomes much less.
The risk becomes
That's
smaller.
why we don't want to go too early because the risk is still high, right? You're up and down, maybe yes, maybe no. Wait until the momentum is very strong, then you have
less risk, still good. You can focus only on that one, and that's probably going to give you the best result.
Casting diaper is not always a big thing.
Yeah, I think it's probably never a good thing. Just find the best there and just focus everything on that. And it's easy to be distracted, right? There's so many things going on. There's so many stories. There's so many news. There's so many stocks. There's thousands of things to look at. There's today, there's tomorrow, there's the next day. You have to kind of, you have to be willing to say no, because then you're ready for yes.
Okay.
If you keep saying yes, then you've got nothing left for the big yes when you find that big yes. So better just spend a lot of time looking, and then once you find the one that's really good, okay, put all the energy on. So I think that's the rest as well. Yeah, Boeing could be good, could be, we don't know. Disney is better, but it's not spectacular. So I think we just move on with for the time being. And then later it can always, like I said, there's always plenty of opportunities. So it can always come back later.
Okay, Mr. Sebastian. So that's it for Disney and Boeing. Both are performing better. It is doing better, but still not quite there.
Oh.
So in conclusion, in your personal opinion, it's better to like stick us at the moment.
Yes,
Okay, because that is what the numbers are saying.
that's what the data says, yeah.
Okay, Mr. Sebastian. Thank you so much for your time today. It's very fun talking about Boeing and the Disney stocks with you today, and to know your perspective as well about these two companies. Thank you so much once again, Mr. Sebastian, for your time, and thank you as well to our viewers who watched this video from wherever you are. Don't forget to like, comment, and subscribe this channel so you don't miss out any more interesting videos and interesting talk about many more stocks with Mr. Sebastian here with us.
Nah, itu ya teman-teman. Berarti kalau kita bisa simpulkan, untuk dua saham ini, saham Boeing dan Disney, memang keduanya ini mengalami perbaikan ya. Ada perbaikan, ada peningkatan nih. Tapi memang angkanya masih belum cukup atraktif nih untuk investor di saat ini. Tapi sesuai Mr. Sebastian bilang juga, kalau perusahaan company ini harus terus melakukan inovasi yang baru. Nah, Boeing ini akan melakukan inovasi baru, mereka akan merilis pesawat baru, maskapai baru, Boeing 777. Dan untuk Disney sendiri juga akan merilis kapal pesiar baru nih di bulan November dan Desember tahun ini. Jadi kita sekarang tinggal tunggu dan lihat setelah adanya inovasi baru dari kedua company ini, apa yang akan terjadi. Gitu ya teman-teman.
Okay, thank you so much, Mr. Sebastian, once again, and we'll see you next time.